Well, it's now time to bring you a facts feature on the show today. As we look at Nigeria's foreign reserves, it has continued its downward trend, losing about $178 million in the month of March. Now, the reserves, which stood at $34.99 billion as of the end of March the 1st, dropped to $34.82 billion recorded on the 31st of March. According to the central bank's fourth quarter economic report, the performance of the external sector improved in the fourth quarter of the year 2020, despite the challenges of sluggish global recovery, weakened global demand, and also soaring second wave of the COVID-19 pandemic, as well as tense political environment in the United States. The Apex Bank also stated that an estimated overall balance of payment surplus of about $790 million was recorded in the fourth quarter of the year 2020 from about $140 million recorded in the third quarter of the year 2020. Now, amid the current fragile economy recovery from recession, experts say the continued trend could also be attributed to low foreign inflows into the country, forex market interventions, and also forex policies that have discouraged foreign investors. To discuss this and much more now, I have joining me from our Abuja studio. He's the president of Capital Market Academics of Nigeria, Professor Uche Uwaleke. Good to have you on the breakfast on the Business Nigeria show this afternoon.
Yeah, thank you, David, and compliments of the season.
Same to you. Happy holidays. Now, let's start off with expectations that we're going to see our foreign reserves reach at about $42 billion on the back of recovery in terms of global oil prices and also looking at stronger vaccine rollout. With the pendulum swing we've seen so far in terms of our foreign reserves from last year up until the first quarter of the year, do you think we'll see any improvement?
I think so. Going by the trend, if you noticed, the worst record we had in the month of March was on the 18th of March, when the external reserves dropped to as low as $34.4 billion, and that's talking about gross reserves. The liquid reserves was in the region of $34.11 billion. But between 18th March and the 31st of March, if you check the CBN website, the latest figure there is as of 31st March. The reserves, have grown. We've seen some accretion to about $34.8 billion. That's talking about the gross. But of course, with respect to liquid reserves, we are in the region of $34.5 billion dollars. So, if we go by the OPEC plus meeting of April 1st, in which a lot of people felt surprised that the 23 member nations, of course, you have 13 from OPEC and then 10 from the allies led by Russia, that they agreed to ease production cuts, and that's on the back of the fact that summer is approaching in many parts of the world, and of course against the backdrop of vaccine rollouts, there is this expectation that economic activities are likely to pick up. A number of people will begin to travel again, so the demand for jet fuel will of course increase. So the decision to ease output, production cuts by as much as 2 million barrels, barrels per day, by over 2 million barrels per day, as a matter of fact, between now and July, of course, gradually, beginning with 350,000 barrels for next month, and including even the 1 million barrels per day, voluntary cuts, done by Saudi Arabia. So Saudi Arabia is also going to ease production cuts. If you add that, you have over 2 million barrels. Well, you could say that is expected to boost supply and drop prices. But given the demand, anticipated demand that is likely to happen, I think the projection is likely to be met. And if you also look at what some experts are saying, analysts are saying. Bloomberg, for example, released a note the other day talking about being bullish on oil demand. So if you take all that into consideration, and you also take into consideration the fact that Biden's energy policy is not too much in favor of shale production, there is every likelihood that shale production will drop, at least in the short term. Then one could say that yes, the projection is likely to be met. So for countries like Nigeria, that should translate to more revenues.
Professor Owoleke, what are some of the lessons that you think we ought to have learned, especially looking at what happened in the year 2020, the mistakes you're still making in the year 2021? Some have said it's time to just broaden our revenue base, to have much more foreign exchange and not to just rely heavily on oil, because the oil market is always open to shocks, external shocks that are beyond our control. So any downward trend means trouble for our income or our revenue base.
I agree with you. There's no point, exposing the country to a lot of vulnerability in the sense that the economy is depending on one major source of forex. And as you know, the oil revenue accounts for over 90% of our forex, and that's why we're having the challenges we're having in the external reserves. That's the major source of forex for Nigeria. The others, foreign investments, whether foreign direct or foreign portfolio, including loans, are shrinking, and that's the more reason we should, as a matter of fact, stating the obvious, David, there is need to diversify revenue, diversify export base, so that this economy can depend less on oil, because that market is quite volatile. Look at what happened the other day, the Suez Canal,
exactly.
The cargo that fell caused traffic, and then all of a sudden, oil price went up. And between April 1, when the decision was taken to, ease the production cuts, remember on the day of the day decision was taken on Thursday, oil price actually went up. Brent went up as high as $64, gaining $2. WTI also went up. But what have we seen today? Okay, the prices have started coming down. So that tells you that this is one market that is highly volatile, and no matter how much OPEC Plus tries to control price, there are still factors over which the
beyond our
23 member countries will have control. Remember too that OPEC Plus actually controls just about 50% of world oil output. There are other countries that are also producing oil. The US is there, Canada is there, and these are major oil producers. And against the backdrop of the projections that we are getting with respect to electric cars, okay, the likelihood that the demand for oil in future, okay, will drop is very much there. So that is a call to action for us in Nigeria to do things that will diversify the export base so that we can have more and more forex, stabilize the forex market, strengthen the naira, because that's very critical. But as long as we continue to rely on a sector that is highly volatile, we'll continue to have these challenges, particularly with respect to the exchange rate. As I said earlier on, the real reason we're having this problem today is supply. Supply of forex. It's not even demand. Yes, demand may be there. You could say, let's reduce demand, let's encourage Nigerians to, buy Nigerian homemade products. That is on the one hand. Yes, before now, central bank has done everything to manage the demand side. Demand management strategies, which included restricting certain items from accessing the forex, the 42 items you remember. But there is still a problem. And that is why the central bank now would appear to now turn to the supply side. Okay. You have seen the central bank now trying to incentivize, diaspora remittances by their naira for dollar,
exactly.
naira for dollar policy. So the supply end deserves a lot of attention. PwC, in one estimate, has said that this country can get as much as $34 billion by 2023. Coming from diaspora remittances. So the potentials are there. We should look at that. If you look at Ethiopia, for example, as small as the country is in terms of economy compared to Nigeria, relative to Nigeria, Ethiopia has introduced the Diaspora Trust Fund, to complement also the measures they have. So that has also led to an increase in, I would say, in foreign inflows into Ethiopia. So for us in Nigeria, we can borrow a leaf and also have diaspora, trust fund, where those in diaspora commit to, saving $1 a day for the purpose of remitting that, into Nigeria.
Prof.
And I think given our huge population of diasporans, that will go a long way to at least ease the pressure we're currently facing now in the forex market.
Prof, we're looking at the diaspora remittances and the forecast that we have there, but those in the diaspora are also facing the same issues and a little bit much worse, looking at the impact of the COVID-19 pandemic. So we are expecting that we'll see a downward trend in the volume of remittance from that area. But now let's talk about the Central Bank of Nigeria's intervention so far in terms of ensuring that we have proper forex management policy, looking at liquidity injection into the market. How sustainable really do you think this is at this point in time? Because for a while now that has been the practice, but in the long term this is not sustainable. What should we be doing differently in terms of our monetary policy and then fiscal measures?
Yes, I think the central bank is looking at what has worked elsewhere. What has worked in places like Pakistan and Bangladesh. The use of rebates, the use of incentives for people that live abroad, to bring in funds. There's this study that says that to remit $200, for example, to Nigeria, it costs about 4.7%, to do so. So the idea of trying to reduce the cost of remittance, should be one incentive for people, remitting funds. So I think, as I said, the central bank is trying to borrow from what has worked in Pakistan and Bangladesh, and that's why the bank is saying let's give this a trial for 2 months. So it's a 60-day experiment the central bank is conducting. If it works, if it translates to a significant increase in what comes in from the diaspora, I'm sure the central bank would be encouraged to do more, to extend it, or even to increase the the quantum of incentives. So you also look at the foreign investment thing, and if you look at the numbers from National Bureau of Statistics, really, yes, you mentioned it. COVID was a major challenge that we had in 2020. Total capital importation in 2020 just amounted to about $9 billion. Compare that to over $20 billion that was that came in 2019. So you could see the differential by over 50%. So and if you also disaggregate that, what came in, it's foreign direct investment and foreign portfolio investment really lagged behind, apart from the few loans that we got. So we need to take a critical a closer look in those directions, particularly when you take into cognizance the fact that the bulk of our capital importation into this country comes from the US and the UK, and these are countries that were hard hit by COVID. But now that COVID is receding, even in these countries, now that vaccines are out, now that world economies are opening up, we should now hit the ground running, take advantage of that, and see how we can open up our economy to attract more foreign direct investments in particular, and foreign portfolio investments to help help our reserve position. Another thing I also think we should do by way of encouraging exports, should be to also pay a little more attention to the commodity exchange, trading ecosystem. I was happy the other day when the central bank said it was going to bring 50 billion naira to resuscitate the Nigerian commodities exchange. Of course, that is one good step that the central bank should take very quickly. And when that happens, I expect that the central bank, after resuscitating it, should hand it over to the private sector, to manage. Because what that does is that it will help galvanize the agri sector such that we are not only producing, what we eat, but we can also produce. Farmers will get the right prices for their products, and they'll be encouraged to produce, produce more. And then we'll also see that sector becoming more attractive to our youths. A lot of our teeming youths are not going into agriculture because it's not attractive. People see that as they don't see it as something that can, enable them create wealth. But if youths are encouraged to go into agriculture, mechanized agriculture, including the entire value chain, processing in particular, okay, that will help, to boost exports. One advantage of a commodity exchange is that it will ensure that whatever we're producing here, has the right standard, meets export, quality.
Prof,
so
if I
that's
may
where we
button
can
here
boost
at this point in time,
exports.
if I may button here at this point in time, you seem quite optimistic in terms of spurring or catalyzing our local base by improving on our exports. But first and foremost, the issue in ground is that we've barely even attended to the needs of the people in Nigeria at this point in time. And another reality that we've also had to deal with over time is the lingering forex scarcity. This is still a menace that stays with us. Industries, sectors are not necessarily able to access forex in terms of propelling their business and then also having much more. You talk about the manufacturing sector and also export base. People need to order for raw materials and a whole lot more, and they need forex. But we still have this scarcity lingering, stifling, mitigating any efforts. Do you think we're going to see any improvement so far in this regard?
Now, on the first point, regarding domestic consumption, you try to allude to the fact that food inflation is high today because of supply. We have not even fed ourselves. Then why should one be talking about exports? Now, the truth of the matter is that if more people go into that sector, if there is mechanized agriculture, there is no reason why we shouldn't be able to feed ourselves and also have, something for exports, particularly processed raw materials, for exports. There is no reason at all, given the potentials that we have in this country. Agriculture contributes over 24%, to our GDP and employs about 60% of the population. So it's one sector that we should, I think we should, give attention as a substitute, to the oil sector that contributes less than 10% to GDP, employs less than 5% of the population, and is not an employment elastic sector, highly capital intensive. The much we are putting in the oil sector, little of it in agriculture, will do so much. Now, that also speaks to the fact that, forex is scarce. Scarcity of forex is a product of the fact that we are not earning enough. We are not earning enough, forex to be able to meet these needs. Okay, gladly, what we have at the moment, $34.8 billion, as I said, we have been told is enough to cover 7 months of import. So, to that extent, you could say that the central bank is still, strong for purpose of intervening in the forex market, and that is where I will now subscribe to the idea of increasing those interventions so that these critical sectors can have access to forex. If we say we have enough to cover 7 months of imports, okay, that also means that interventions, should increase. Now, beyond the traditional rule of thumb of 3 months of imports, which is usually set. If you can cover 3 months of imports, you're buoyant. Of course, we also know that there is this what's called the Guidotti rule. The Guidotti rule is the rule that says that your external reserves, must be enough to cover your short-term foreign loans. Okay. In other words, your ratio of external reserves to short-term foreign loans, should be higher than 1. And in this country, Nigeria, it is higher than 1. When we say short-term foreign loans, we mean those loans that are maturing within 1 year. So since we are within the compliance threshold of the Guidotti principle, and we are also within with the compliance threshold with respect to the rule of thumb that says if you have more than 3 months import cover, you're buoyant. I would suggest that the central bank should intervene more in the forex market, not only to stabilize the exchange rate, but to also ensure that critical sectors of the economy, manufacturing, the ones you've mentioned, have access to forex, especially now that we hear that the backlog of forex demands are being met.
For the lack of time now, let's now touch on the matter regarding devaluation or not about the Naira at this point in time. Efforts towards the unification of the Naira in terms of our foreign exchange market as well. How do you see things playing out going into this quarter, this second quarter of the year, the third quarter, and wrapping up the year 2021? What do you see playing out, especially at a point in time where we are saying the Naira is not trading favorably and the conversation around devaluation always comes up within the Monetary Policy Committee meeting? Do you think this would force the hand of our monetary policy authorities?
Yes, there's this general belief that the Naira is currently overvalued, and those that argue that the Naira is overvalued will be looking at the exchange rate, in the parallel market. Of course, that's not the proper one to use, because we know the parallel market is a shallow market, and it does not really reflect, the demand supply forces, given the size of the market. So you can't say equilibrium price for the Naira to dollar equilibrium price is the parallel market exchange rate. That's not correct. But but when you look at what is happening in the AFEX, the autonomous foreign exchange window, where you have the investors and exporters window, exchange rate is around 410. So they also say, yes, that is more like it. Even though the official rate is 379, the I and E window is more like it. So the central bank should now collapse, try to unify rates, such that the Naira will find this level. But the truth of the matter is that yes, the IMF has always canvassed unification, but unification, even by the admission of the IMF, has to be a gradual thing. Has to be IMF actually recommended in their Article 4 consultation for this year. Yes, recommended multi-step approach, which I think the central bank is adopting, which was why during the last MPC meeting, when the central bank governor was asked, have you adopted flexible exchange rate, complete flexible exchange rate, he said no, that the country is still using the managed floating system. Exactly. Managed floating system is a situation where the central bank intervenes from time to time. We can't leave the fate of the Naira completely at market forces for reasons I adduced here much earlier. The demand is so much, you have this disequilibrium that's in favor of demand. So until we do something about the supply side, we can't be talking about floating the Naira. But there's no doubt that unification has merits in the sense that it will remove arbitrage, round tripping, and also curb the corruption. But it's something that has to be approached gradually. So between now and the end of the year, I want to expect that the central bank will pursue that in a gradual way, while also having an eye on the consequences of that action. Professor
Owaleke, I'll just like your last word on this now. What sort of sentiment do you have in terms of Nigeria's economic recovery? Do you share cautious optimism, or you are highly optimistic that we are going to see improvement in our volumes of trade and also remittances for this quarter of the year on the back of what we've seen playing out in the first quarter?
Yes, I am positive that we are going to have some improvements in economic recovery. The quarter 4 2020 report, recall, was 0.11%, positive growth, which effectively took us, technically took us out of recession. So I want to believe that in the course of the year, especially before the year runs out, the economy would have recovery would have stabilized. The central bank had put an estimate of projection of 2%, and I think that's more realistic. We could get up to 2%, this year. That of the federal government, fiscal authorities. If you look at the 2020-21 budget, the projection is 3% real GDP growth, but I think that may be ambitious. But that of the central bank, looks realistic. So we could get 2%, and I also think that with COVID receding, because the major problem we had last year actually was the pandemic. So with the pandemic receding, especially in other parts of the world, I expect diaspora remittances to increase. I expect capital importation, generally, to increase. I also expect that economic activities generally, will pick up. Look at what happened in the Q4 of 2020 rather. The non-oil sector powered the economy. Okay, the oil sector even went further down by over 19%, but it was the non-oil sector that actually lifted us out of recession. And I want to believe that going forward, this the non-oil sector, particularly the agri sector, that showed a lot of promise, with the raft of interventions by the central bank and the government as well. I want to expect that the non-oil sector, will do better, will not disappoint, this year, as I said earlier on, against the backdrop of improvements in COVID in particular, the pandemic.
The fragility of the Nigerian economy still remains one of our biggest concerns, and we just have to put our best foot forward. We expect the economic team and all of the councils, the think tanks, to come together and think of out-of-the-box measures to get Nigeria kicking back. Thank you very much for your time on the show so far, Professor Uche Uweleke. It's been a pleasure speaking with you. He's the president of Capital Market Academics of Nigeria.